Okay, so this is the 2017 DB. I'll just do the workings of this one. If I have time at the end, I'll throw in the answer. And just don't think there's anything you haven't seen before, but I just want to work through as many of these as I can. All right, so the first one is the stock working. So the stock starts off at 78,500, and it tells us that no record has been made in the books for goods in transit. So goods in transit, we change stock, purchases, and creditors. So stock started off at 785, purchases is 455, and creditors is where are you? 49.2. Now we're going to add on the cost price of the goods that we bought to these, because you bought them, you own them, they're just not in your warehouse. So the cost price is the retail price. I'll just work this out. The cost price is the retail price worked back to cost. So divide by 125, because it's cost plus 25%. So divide by 125, multiply by 100. It's 3,600. So we're going to add 3,600 to each of those. You don't do anything with this cost price. I'll just leave it there to just for the sake of the video. Don't do anything with it. Okay, that's working one. Working two is your patents working. So investment income due, patents, and patents written off. So investment income, they're 4% investments, and you got them in the first of the ninth. So you only have them for 9, 10, 11, 12. You only have them for 4 months. It's 4% of 150,000 by 4/12. So that's 2,000. So the investment income due then is 2,000 minus whatever you've received. So it tells us we've received 3 months investment income. So we've received 3/4 of the 2,000. You're getting 4 months. You've received 3 of the 4 of them. So you're due to get. You're supposed to get 2,000. You've got 1,500, which means you're due to get 500. The patents then. Patents incorporate 3 months investment income. So patents started off as 50,500. You need to add on this 1,500 here. That's to get rid of it. And that brings up to 52,000. And then patents are being written off over a 5-year period. So you divide that 52,000 by 5. That's 10,400. Which is 41.6. So that's working 2 done. Working 3 is your depreciation working. So you have your delivery vans first. So your delivery vans at cost started off as 105,000. And during the year, a van which cost 33,000, so take that away, was traded in against a new van costing 42. So add that on. So that's 114. Okay, you have to depreciate that then. So the rate of depreciation is 20%. So it's 20% of 105,000 for the first 7 months of the year. So the transaction took place on the 31st of the 7th. So for the first 7/12 of the year, you had 105,000. For the remaining 5 months of the year, you had 114,000. So the two added together is 21,750. Your accumulated depreciation then started off as the difference in the 105 and 68.5. So that's 32, 36.5. So 36.5. You have to add on the new depreciation charge for the year, so 21,750. And then take out the depreciation of the old van because you don't have it anymore. So 20%. The old van, which was 33,000, for the number of months you had that van for. So you got the van on the 30th of the 10th, 2012. So you had it for 2 months in 2012, November and December. You had it for all of 13, 14, and 15. So 36 plus 2 is 38. And then you had it for another 7 months. So 38 plus 7 is 45. So you had it for 45 months in total. Which is 24,750. So that's 33.5. So your next step then is to work out your profit or loss on the sale. So to do that, you compare the value of the van. So the value of the van you sold, which is 33,000, minus the 24,750, so that is 8,250. That's what it's worth. Compare that to the allowance you received. The allowance received is 9.5. So you got 9.5 for something worth 8,250. So that's a 1,250 profit. Okay, the check for the net amount was included in purchases. Now we already have purchases up here. So you got an allowance of 9.5 for something worth 42. That means you wrote a check for 32.5. Yeah, 32.5. So the check for 32.5 has to get taken out of purchases. That's that working done. Now, the suspense working. The suspense figure arises as a result of the incorrect figure for mortgage interest. So we have to work that out. So the mortgage interest figure here for 4 months is wrong. So we're going to work out what it should have been. At the same time, we're going to work out what the mortgage interest for the year is. So we go up and find the mortgage. So it's a 6% fixed mortgage. So it's 6% and it's 260. But you got an 80,000 increase on the 1st to the 5th. So for the first 4 months of the year, you had 180,000. Which is 2,400. So this number here of 3.3 should have been 2.4. So we would change that to, well, I'll come back to that in a second actually. Just do the rest of this. So you then had 6% of the 260 for the remaining 8 months of the year. Which is 10.4. So the two added together give you a mortgage interest for the year of 12.8. What we're going to do is take away what's been paid. So what's been paid was 2.4, the 4 months, which gives you a due of 10.4. I wouldn't get too bogged down in that because they're obviously the same numbers. That's paid, uh, that's due, and that's the total. But anyway, to the suspense elements. The insurance incorporates suspense, so the mistake is incorporated in suspense. So this 3.3 should have been 2.4. So when we got in to get it to 2.4, we're taking away 900. So this goes down by 900, which means this is 1,469,500, and this is still 1,470,400. So we have to bring it back up by the same number. So we have to bring up the insurance by 900. So insurance is 10,500. We're going to add on the 900. Okay, that's the first part. And then the discount received entered only in the creditor's account. So the discount received is in the creditor's account, but that means it's not in the discount account. So it should have gone in the discount account. So we have received the discount of 400. That should be on the credit side. So it's gone into creditors, which means it credits discount. So it brings down creditors, debit creditors, credit discount. So we'll find discount if there is one. There's a discount net of 3.7. Net means it's the total of the discount allowed and the discount received. So it's at the moment it's an expense, but we have received another 400 euros. So this 3,700, the expense in effect is going down, or the net position goes down by 400 euros. So that goes down to 3,300. Now again, if this side goes down by 400, the suspense has to, or the insurance incorporating suspense has to go up by 400 to make it continue balance. So this discount went from 3.7 down to 3.3. So this side went from 1,470, 100. So you have to get it back up to 1,470, 400. So we're adding 300 onto, so we're adding 400 onto whatever incorporates suspense. So that's that one done. That's a very common way of asking the suspense working. So just be aware of that. Discounts go in discount and creditors, or if it's discount allowed, discount and debtors. They're the double entries. If they've gone into creditors, they haven't gone into discount. If they've gone into discount, they haven't gone into creditors. So just that line there, entered only in the creditors account. That's the really important word. If it's in creditors, it's not in discount. If it's said only in the discount account, that would mean it's not in the creditors account, and you would have to adjust that accordingly. Working five then. Goods with a retail selling price of 6,000 were returned to a supplier. The selling price, so it's purchases returns. The selling price is cost plus 25%. So what I'm going to work out as always is the cost price. All right. So anytime it gives you the selling price, work that back to the cost price. So 6,000 divided by 125 multiplied by 100. So that's 4.8. The restocking charge then is 10% of that. Which is 480. Now, nothing has been done with this 480. So if we read it, the supplier issued a credit note showing a restocking charge of 15%. So it was 15%, not 10. So it's, just change that. So it's 720. So where we have dealt with the credit note, we've brought purchases down by 4,800 and we brought creditors down by 4,800. But in reality, we've only gotten a credit note for 4,080. So we've brought creditors and purchases down by too much. So we have to bring back up stock, or we have to bring back up purchases of creditors by the restocking charge. So we brought them down by 4.8. We should have only brought them down by 4,020. So we have to bring both purchases and creditors up by 720. So purchases goes up by 720 and creditors goes up by 720. So it's only the restocking charge that hasn't been dealt with. If nothing had been dealt with, if it just said goods with a retail selling price of 6,000 were returned to supplier, the selling price cost was 25%. The supplier issued a credit note showing a restocking charge of 15% of cost price. No entry be made in respect of this transaction. If it had said that, not the restocking charge, well then creditors and purchases would go down by 4,080. Okay, the difference between these two numbers, they both go down by that amount. So again, what's happened is they've brought them down by 4,800. They should have only gone down by 4,080. So you have to bring them back up by 720 to make the thing correct. Okay, provision to be made for mortgage interest due. Well, we've done that. 20% of the mortgage interest for the year refers to the private section of the business. So that's drawings. So I'm going to go back up to this 12,800 and I'm going to take away 20% of it, just of this 12,800. So 2560. So then our mortgage interest expense becomes 10,240. The 2560 gets added to drawings. So you're moving it from mortgage interest and you're adding it to drawings. So 22.5 plus 2560. So this 10,240 is the answer that goes into your mortgage when we go to put it in over there. Okay. So that's that. Provision for depreciation on buildings 2% per annum. So it's 2% of the 515. Buildings haven't changed. So it's 10,300. You would have accumulated depreciation except if you read on the revaluing building. So you've got a revaluation reserve instead. So same process, difference between the 515 and the 463 is 52,000. You're going to add on the 10,300. And then you're also going to add on what the difference, the revaluation reserve. So the difference between the 515 and the 650 is 135,000. Okay, so that's the difference between 650 and 515. That's your revaluation reserve. So you don't have accumulated depreciation when you revalue. So I'll just put in that my buildings have gone 515 plus the 135 equals 650. I don't have to show that, but it's no harm to. Working 8 then. Goods withdrawn by the owner for private use with a retail value of 2,000, which is cost plus 25%, were omitted from the books. So again, find your cost price. I'm not doing anything with this, so it's 2,000 divided by 125 multiplied by 100. So your cost price is 1,600. That gets, it's drawings, it's private use, so it's taken from purchases, not from stock, always from purchases. So purchases goes down by 1,600 and drawings goes up by 1,600. Okay, that's that. The final working then, a check for 700 had been received in respect of debt of 1500. So the bad debt recovered is the full 1500. All right. The check affects bank. So the bank in this case is an asset. Very rare. So we've received 700. So bank is 11.9. And we're going to add on that 700. That's 12.6. And then debtors, it goes up by the difference. So it's 800 gets added to debtors. Debtors hadn't changed. So 53,000 plus 800. Okay, so that's the whole lot done. So just see if we have time. We're going out for a bit of lunch just to finish it off. Yeah, okay, I'll finish it off. So, all right, we'll start throwing in the numbers. So I've got my thing worked out. I'll start at sales just like I did last time. So sales hasn't changed, I don't think. So sales 778. Opening stock is, I'm going to fly through this now, 73.4. Purchases has changed. So 45,220. And closing stock has changed as well. So closing stock is 82.1. That's 361,480. No, it's not. 82.1. 40. Sorry, 778, 600. All right, your expenses. All right, working through this, you've got salaries, 84. That hasn't changed. But discount net is selling, rent is debit, so rent is admin. Of course, if rent was credited, it'd be other operating income. If insurance incorporated suspense, so I'll go find my insurance working. It'll be plus 1300, so 11. Let me just check that. Sorry, I'm looking at the American scheme here and I have a different answer. So 6% of 180 by 4/12. Gobshite. But that's 4%. Jesus, that's going to affect everything. So that's going to be, that should be 3.6, so it's 300 more. So that goes up by 300, so this goes down by 300. Sorry, this drawing is going to be wrong then as well. So going to be 14,000. So that's going to be, is that 12, 11, 6. All right, so the drawings be plus 28. Let me check, change this. That's what happens when you rush things. All right. Sorry about that. So the insurance then will be 10.6. Right, the ones then from the marketing schemes, patents written off. 10.4. And insurance, patents written off. And depreciation of buildings is 10.3. That was from the workings. Okay, so just add those together. Your sellings and distribution, you have from the question, you have commission. That hadn't changed. Commission is debit. Of course, if that was credit, it would be another operating income. You have your discount net. That was from the suspense working. Jeez, I hope I got that right. Discount 37 minus 400 is 33. Just check the mark. Yeah, that's right. And you've got depreciation of delivery vans. Depreciation of delivery vans 21,750. Just make sure that's right. 21,750. Yeah, there's no loss on the sale of delivery vans. It's a profit of 1,250. So that should be them all. I'll check the marketing scheme at the end. So add all your expenses together and take your answer away. Yeah, 2630. Your other operating income, you have a profit on the sale of a van. Yeah, 1,250. Yeah, oh, you had your bad debt recovered from the last working, 1,500. There's no other credits. Nope. So we'll just add those together. Add on your investment income. It was investment income 2,000. Now I know this 10,240 is wrong. It was 12,000 or something, wasn't there? 11,200 or something. Mortgage interest. Yeah, 12,000 minus 2,800 is 11,200. That's 194,180. All right, part 2 then. Your patents. Your patents were 41 something. 41.6. Land and buildings revalued, so 650, 0 and 650. Motor vehicles were 11 something. Motor vehicles 114. The accumulated depreciation is 33.5. That's not. Yeah, it is 33.5. So total them all, and then throw in your investments. So your 4% investments, 150,000. It's the full amount, obviously, not the 4%. So add on the 5. Remember to add on the patents. So that's 922,100. Your current assets value for your stock from working 1, 82,1. You're going to have debtors. I don't know if there's bad division, but I'm going to put in less BDP. It didn't change, but it might be there. So your debtors 53 something, 50. Where are you? Yeah, 53.8. There is a bad debt provision of 3.2. So that's 55.6. No, it's not. 50,600. You've investment income due of 500. So it's quite small. Where's the patents? Yeah, 500. And you have bank. Now that's just be careful with the bank. Bank is nearly always a current liability, but in this stage, bank is 11.9. It's on the debit side, and adding on the 700 brings you up to 12.6. So add those together. You've got your creditors. Creditors. Sorry. 53,520. You'll have your mortgage interest due. Now I made a balls of that, so just make sure I've got the right answer in the thing. 11.6 should be the mortgage interest due. Nope. Yeah, obviously you're taking away 3.6 from that. Not the 2.4 that I would made out, so that'd be 10,400 is the mortgage interest due. It's amazing when you make one mistake how it can impact on a few different areas. You're looking for any extra ones in the credit column then. So VAT 5.1, that hadn't changed. If that was in the debit, it'd be an asset. It's in the credit, so it's a liability. PRSI, same thing. 4.3 could be on the debit. If it was, it would be an asset. So there are all of them. So we'll take them away from each other. And because it's positive, you add it on to your assets, and that gives you 9,945.80. Your capital and reserves, you've got your mortgage. 260. Your capital at the start of the year of 370. You've got your revaluation reserve. Which is a working. 197,300. What else have we got? Your net profit from over here, 194,180. Add those together, and obviously take away your drawings. Now I just need to check the drawings working. I've obviously made a couple of adjustments to that, and I'll go away. So the drawings was 28 and 650. That can't be right. So I have an extra 0 under 26.9. See in a second. Let's take that away. And hopefully, if we add them on to the mortgage, they'll add up to the same, and they do. Okay, so that's really the workings you should be interested in there. Apologies about the mistakes. I just want to try and get as many of these sole traders up with a bit of term as I can. We'll see after the break.